Well, as we've noted, Amazon.com reported quarterly profit last night that topped estimates as cost cuts and strong sales in the cloud computing segment helped the e-commerce giant. But the company also warned that growth in that very same cloud computing business is slowing down, something that investors were not expecting to hear. For more, we're joined now by John O'Connell. He's Chair and CEO of Davis Ray. Thanks for coming in. Great to see you.
Thanks for having me on again, Paul.
Let's begin with Amazon. Certainly the market is not taking this in the same way that it took the Meta results earlier this week, in which the whole market seemed to react. There were some calls early this morning that the markets might be down on this guidance from Amazon.
Yeah, you know, it's you never know how investors are going to react from one thing to another. You know, the Meta numbers were fantastic. We own Meta. The Microsoft numbers were fantastic. We own Microsoft. We own a lot of Amazon as well. We bought a little bit more this morning, quite frankly. You know, the stock was as high as 122 after the earnings were announced because they were fantastic numbers. They were fantastic results. I think investors were, the quick twitch investors that are out there were disappointed to hear a CEO be transparent that the business is still messy, and the month of April is looking sequentially a little bit weaker than it was last year, which was a very strong quarter. You know, I think it's just it's fast money moving around. But you know, if you look at Amazon underneath the surface, and if investors really want to own a company and have them invest your money for you, Amazon invested $59 billion last year into its infrastructure, its technologies. It's one of the most advanced players in artificial intelligence. It has been for a long time. It has its own computer chips that are probably the most advanced computer chips in terms of machine learning, large language models. You know, they built a UPS in 2 years. So if you want to give somebody money and let them invest it in the overall economy, both services, shopping, entertainment, but also fulfillment and compute power, when all the buzz is out there about compute power, there's probably no better company in the world to own right now. And it's trading at a 50% discount to its historical enterprise EV to EBITDA multiples. So it's growing. It's got the cat by the tail from a future perspective. It's trading super cheap. I just think that, you know, there's a segment of the investing population out there that is worried about the next 30 days. But if you're doing that, you're really missing an enormous opportunity. This stock in 2 or 3 years' time could easily be a double, and that would still just be trading at its historical valuations, not taking into account any growth. So it's, you know, investors behave the way they behave on a daily basis.
As for the sector generally, or indeed the U.S. economy generally, you don't take Amazon's cautionary guidance on Amazon Web Services as a headwind. They seem to be saying customers are slowing down their spending on things like cloud computing.
Customers are slowing down their spending on everything. I mean, Amazon did that last year, this most recent quarter. They've shed 100,000 workers in their warehouses in the last 90 days. That's just natural attrition. You know, Jassy said, I would really recommend that investors listen to the conference call. It's 45 minutes. It's time really, really well spent for people that are interested in learning about the way this company thinks. They're cutting back. They're working with their customers to help them reduce their spending to make them more competitive longer term. They're locking them in. They're working with their customers. There's no way in the world that their customers can avoid investing in the cloud computing infrastructure over the longer term. This company, with its advertising business, its fulfillment business, its knowledge about customers and what they're interested in, I don't think there's many companies that are as well placed. I mean, Microsoft is. That's why we own it. But Amazon is another one of those foundational companies that I just think that it's in such a good place. And like everybody, they're dealing with a difficult environment, but the economy still is growing. And people still are buying things. And if you want to buy things cheaply, if you want to be able to do computing power the most cheaply as you can with the largest infrastructure in the world, that's Amazon, with their own chips to drive that business. So I don't think that investors should be overly concerned about the slowdown in the business. We've been talking about that ad nauseum, data points, whether the Fed raise or not. Strategy has been wrong for a year and a half. Just make investment decisions. Nobody pays attention to what companies are doing anymore. Everybody's turned into a macroeconomist. It's bizarre.
Okay, you say you like the Meta results very much. The market did as well. How well is Meta doing at investing investors' money? The concern there is, obviously has been too much on AI.
You know, we were talking about complacency this morning. We're having a really, really good year. And we don't want to be complacent about that. If you don't make investments, if you're not reflective in making investments in the future, like Meta has been doing in artificial intelligence to help people design better advertising campaigns, design the actual campaign, choose how they are going to actually help their customers spend money. If you don't make those investments, you will die. IBM was complacent. Digital equipment was complacent. Compact computer was complacent. These companies are investing more than anybody out there in the world. And if you don't make investment decisions, you will die. And these companies, Meta, Amazon, Google, Microsoft, Apple, they are making massive investments. And if you want to be part of the future, you've got to own those companies.